It is Friday, May 15th, 2020. It is 8 p.m. Pacific Standard Time, and so you know what time it is. It's time for a little bit of coin metal. And it was yet another no jujitsu, get your ass kicked at Jiu-Jitsu Friday. I gotta tell you, I'm not really happy about that at all. It's one of those things where, you know, my Jiu-Jitsu gym probably wouldn't have been in any kind of trouble as far as its finances are concerned. But being down for several months like this, it's not really good on their bottom line. And without adequate relief, there's a strong possibility that they would be closing. And that would be very, very anger-making for me. You know, it's one of those things that would piss me off to the point where if crypto really lodges into the global economy to the extent that I believe it will, one of the first things I'll be doing is opening up a fucking jiu-jitsu gym. Fuck these people. You know, I mean, I was looking through it and it seemed to me there's a lot of overlap between those who wanted the Green New Deal and the provisions or restrictions rather, that governors and mayors have been imposing on their people in the United States here. And it seems to me like it's like backdoor imposition. You know, as a matter of fact, the whole idea of masks, I addressed that one as the potential of Sharia law being imposed on Americans via the back door. And I know that sounds kind of weird, but really, if you think about it, what is the functional difference between a religion asking that you be wearing a mask and a government asking that you be wearing a mask? I don't see one. Anyway, as far as what we're going to get into today, I got plenty of good stuff. And so I did do a little hunting around beforehand. You know, you can multitask when you're in the digital age and you're not in one area or one specified place at any one specified time. You know, if you're sitting around in your computer, you can do things. You know, when other people are streaming stuff to you, you could be doing other stuff in the background. And so, you know, I did a little preparation while jiu-jitsu was going on. I admit it. I'm sorry. It's not the medium for me. You know, although I feel kind of weird admitting this, but I feel like I'm getting stronger and in better shape doing the workouts that I've been doing as opposed to doing the jiu-jitsu that I've been doing. And I know that's not true as far as like if I were to go up against somebody else at this point. I know that there's certain aspects of your game that you just lose. I mean, if you're not pairing off against somebody 3 to 5 days a week, there are aspects of your game that you just lose, and you need to get back on the bike in order to be experiencing those. And as a matter of fact, I'm thinking about getting proactive about that one and just meeting up with people and fucking rolling. Fuck it. But anyway, the point I was getting to is that last week or so, or actually I want to say probably the last month, I've been fluctuating in my weight just because I've been eating a little bit more junk food, which I know is bad. But I've been offsetting it by increasing my workouts. And I think I started adding some progressive resistance training like a couple weeks ago. And I've noticed an immediate increase in my amount of strength. And so I think I want to build on that, you know, that type of training. Because what I've been doing is just doing a lot of mat work. And so like singles drills and stuff like that. And also I've been doing some visualization work, you know, I don't have a physical opponent, so I have to visualize having an opponent. And to some extent that's not any better than having a dummy. But it's still better than doing nothing. And so, you know, like I said, I've been doing a lot of visualizing work and I've been doing progressive resistance training. And the progressive resistance is just taking my ordinary movements that I would be doing and interspersing movements that involve having a weight. So like squats. And one of the things that I've been doing for that is, instead of doing small discrete sets of like 10 to 15 reps, I just blow out as many reps as I can. And I just lock down on trying to maintain the breath and trying to maintain my form, and just doing it until, I can't comfortably get through the form successfully, can't hold the form. Then I'll go ahead and put the weight down and do something else. But I don't stop. And that's the difference between the way I train on my own and the way I train when I'm involved with other people. Or at least in my in jiu-jitsu class, is that I try to keep things continuous. And so, I said this before, if we ever get back down to what I consider normal to be, not having plexiglass screens in the fucking stores and the tape delineating the fucking lines that they want you to walk in, and signs blocking off the doors that say don't enter, and fuck you people. When that shit gets back to normal, and I'm back to doing jiu-jitsu class, I'm not entirely certain that I'm going to stop doing the training that I've been doing on my own, because I feel like if I were doing both, that my game would just go through the fucking roof. Because I've been working a lot on footwork, and I've always been of the philosophy with regard to fighting styles that you have 2 feet, and so you should have 2 leads. You should not be restraining yourself like they do in boxing, where you have a primary forward foot, a primary lead foot. That's the one that you default to. And I've always felt that the mistake with that philosophy, that fight philosophy, is that it causes you to foster a dependence. And if you are ever in a position where all of your right-handed tools, you got your right foot forward all the time, all your right-handed tools aren't available to you, then you don't have your left side developed, and you're weak on that side. And I, like I said, I've always felt like that's just fostering a weakness in your armor, and narrows your vision for your orientation of battle and whatnot. And I think that in older styles, more formalized styles, because they're teaching large volumes of people with a very minute amount of teaching staff per student, it's necessary to break things down into 4 directional attack vectors and 3 or 4 different strikes for each tool, But we're coming into a time when it's possible to be studying pretty much every martial art that's ever existed, and so I think the evolution of that means that we have to be adapting to multiple attack vectors and multiple attack approaches. And so that's one of the things that I've always tried to foster within the way that I move in my training. And so I try and work both sides evenly. And it probably cuts down on my ability to specialize on one side or the other, but I think that's just fine. I'm not overly specialized in any one thing, and so I think probably the biggest issue for me is learning when to let go. Because there's several times when I'll have my opponent locked down with my guard, and I'm like locking him down with my arms and my guard at the same time, and it's like, okay, I've got one, I can let go of the other and manipulate around to where I can adjust the situation. And it really seemed like that was the issue that I was closest to breaking. Like in my stride of development, I felt like I was just starting to get that orientation down to where I was evenly transitioning from top pressure to bottom pressure and bottom pressure to top pressure as my my capability to hold my opponent became available to me, and as the situation adjusted. So I don't know. I'm sure that'll be right where I pick up when it's time to get back to things. But damn, I miss formalized classes, and I'm definitely going to be happy to get back into them. Anyway, let's go ahead and throw down with some music. And I follow my man Mr. Ice-T on Twitter, and he pointed out something today, and it hit with me, and so here it is. This is a song off of Bloodlust, No Lives Matter, First Dance, here on Coin Metal. And that was Death Clock with The Galaxy. And so, as I stated before, I actually did a little bit of planning. Just a little bit. Just teeny tiny. Got a few tabs open in the browser. Got something to roll with today. And, although I do have a few prefaces, things I wanted to mention prior to the big dive that we're going to be doing today. Let me get a sip of this coffee here and get some of this black stuff in my system. Oh, man. That is one thing to be said for this lockdown, is it's cut down on my caffeine consumption. I don't know. I've always had kind of like a love-hate relationship with caffeine. I mean, it's good. I like it. But the biggest problem that I have with it is that it gives you the like urgency of wanting to do a lot of things, but it doesn't necessarily give you the motivation to do specific things. You know what I mean? It's like, oh man, I got all this energy, I can go do something. But I mean, if you didn't already have a plan, you kind of like sit there stalled, especially if you smoke anything. But as I was saying, I got this thing I wanted to get into prior to our big stuff, and this is on somagnews.com. Wall Street comes to Bitcoin, $140 million transaction. This is by Daniel Kutcher. Kutcher. It was authored May 13th, 2020, so, a couple days old, but I had it in my browser, and I wanted to get to this one. Here we go. It was learned that a Bitcoin investment fund on Wall Street raised $140 million before the block prize halvening. The news comes after the famous billionaire Paul Tudor Jones announced he recently started buying Bitcoin. It turned out that a New York Central company raised $140 million with the participation of 3 accredited investors in a previously unknown Bitcoin fund before the halvening. According to the news that Forbes is based on SEC documents, the fund belonging to New York Digital Investment Group was named as NYDIG Bitcoin Return Increasing Fund LP and started sales as of May 5th last week. So, just a week before Bitcoin's block reward halvening took place. NYDIG had acquired BitLicense, a mandatory license for crypto companies operating in New York in 2018, and showed the fund an exemption from securities laws under deregulation. Little is known about the fund in question, but a former NYDIG investment firm named Bitcoin Strategy Fund ties Ben Losky, a governor of New York governor Andrew Andrew Cuomo, who was also on the Cybersecurity Advisory Board and prepared BitLicense. He received consultancy from the $15 billion Stone Ridge Asset Management LLC. Ben Losky former chief inspector of finance in New York State, appears to be registered as head of regulation affairs in Stonebridge, or at Stonebridge. Lawsky, who took office in New York in May of 2011, came to the agenda with a total of $6 billion in fines he had cut to financial institutions, and his name was commemorated with the nickname the Sheriff of Wall Street. He's also the asshole of crypto. Such a fund is not the first for NYDIG. The company raised $31 million with another fund in October of 2018. This was called the Corporate Digital Asset Fund, but it was not specified which digital assets included. Good news, one after another for Bitcoin from Wall Street. Bitcoin Fund news comes amid a series of positive developments. According to the news in the Wall Street Journal, JP Morgan, Coinbase, and Gemini opened their first bank account for crypto exchanges. Last week, investment company 3iQ announced that it raised $48 million for a product traded on the Toronto Stock Exchange. Finally, the famous macro investor Paul Tudor Jones said he had recently started buying Bitcoin. Jones, who is believed to have a fortune of $5 billion, announced that he invested almost 2% of his assets in Bitcoin. Holy shit, that's a lot of fucking cheddar, a lot of Bitcoin. But yeah, this one, the thing that got me the most about it was that Ben Lawsky says, oh, I want a bit license, and he fucking gets one, right? Bittrex has the NYDFS's hand up their ass for 4 years with a provisional license, gets denied a bit license after that period, and we're supposed to believe that there's no undue influence, there's no collaboration behind the scenes making sure that only certain people can get their bit license really quick and do business in New York while everybody else has to get fucking scrutinized to all hell and then denied after having paid the application fees, after having paid the hourly wages for auditors from the NYDFS to be up their ass. I mean, it's completely fucking sickening, honestly. And I really wish that somebody would take them to task over it, the NYDFS, that is, because I mean, there's such a nexus for like perversion of financial law and all that tied up within the NYDFS and the NY Fed. You know, I mean, it's sickening, really. It is the amount of overlapping bad interests, I should say. You know, it wouldn't be. I don't think it would be tolerated in any other industry. And if considering how much is actually dependent upon the financial laws that come out of New York, I think it's really dangerous for them to be managing so much shit, honestly. But in attempts to relieve ourselves of that issue, we've got cryptocurrencies. And this thing here, I thought this is fucking hilarious. I don't know if I predicted that they would be undergoing lawsuits. I think at one point I did suggest that this entity would be experiencing some litigation due to their misreporting of how they're making their money. And no, I'm not talking about Ripple, amazingly enough. But like I said, I'm pretty sure that I'd at one point or another predicted that these guys would be going to court, and for exactly what this story is about. It's on Cointelegraph.com. This is by Samuel Haig, so yes, penis. Lawsuit claims Nvidia misrepresented $1 billion in sales to crypto miners. Nobody saw that one coming. An amended class action complaint filed against Nvidia Corp has accused the firm of violating the Securities Exchange Act by downplaying the extent to which its gaming revenues relied on GPU sales to cryptocurrency miners. The complaint, filed May 14th, claims that Nvidia issued deliberately misleading statements that understated more than $1 billion in GPU sales relating to cryptocurrency miners during the 2017 and 2018 fiscal years. Claims estimate that sales to miners represented over half the company's total sales. No, way over half. More like 75%. And the reason we know this is because when the fucking price tanked for Bitcoin, Nvidia's fucking sales tanked too. When the crypto purge happened, when you look at all the charts and you see all of the altcoins, how they just fucking tanked during that period, Nvidia's sales followed along with that. And the whole time, as a matter of fact, since since about 2013, 2014, Nvidia started getting complaints from gamers saying, hey, we're going to Best Buy, and we're going to Walmart, and we're going to online sites trying to buy your fucking video cards, and they're all gone. What the fuck is going on? Why am I having to pay $700 for a fucking video card that cost me $150 last month? What is going on? And what was going on was the fucking cryptocurrency miners were buying up all the fucking video cards they possibly could and were GPU mining Bitcoin. And this started back in like I said, I want to say it was 2013, 2014. Although, if I'm not mistaken, GPU mining started, I want to say, in about 2012. And then it was either FPGAs or one of those that caused the transition, or caused people to start looking at other hardware architectures for mining other than CPUs. And, so GPUs were like the next step. It's like as soon as people figured out that they could mine with GPUs, it was fucking off to the races. Anyway, continuing on. Let's see. Nvidia was hit with a spate of lawsuits from investors after its stock price crashed nearly 30% after announcing that revenues would fall 7% during late 2018. Nvidia accused of misrepresenting $1 billion in sales. The amended complaint asserts that the firm deceived, quote, the market into believing that Nvidia's dependence on cryptocurrency-related revenues was small, while falsely claiming, quote, quarter after quarter that the gaming segment's sales growth resulted from strong organic demand from gamers. The filing cites a study that estimated Nvidia's misrepresentations obscured $1.126 billion in sales to miners. However, notes that a separate report by RBC Capital Markets concluded that $1.35 billion in sales had been obfuscated by the firm. I would say it's far more than that, but anyway, continuing on. 2017 drives surging demand for GPUs. During 2017, Nvidia's GeForce GPU became favored among cryptocurrency miners, driving enormous profits for the firm's gaming division. In May 2017, Nvidia also launched a chip specifically engineered for cryptocurrency mining, the Crypto SKU, for which sales would be recorded under a catch-all business segment. However, the Crypto SKU failed to catch on, and with many miners continuing to purchase GeForce GPUs instead. The plaintiffs argued that despite the surge in demand from cryptocurrency miners driving sales for GeForce units, Nvidia attributed the demand to gamers as its revenues contributed to the firm's gaming division. Crypto SKU sales underrepresented demand from miners. Investors also claimed that Nvidia also assured that its crypto revenues were small based on the floundering performance of its crypto SKU, misleading the market as to its reliance on sales to crypto markets. Quote, defendants refused to publicly acknowledge that Nvidia's proliferating sales were the result of fickle cryptocurrency miners, lest investors discount the company's stock to reflect the volatility of crypto-related demand, the complaint reads. Quote, instead, defendants opted for a strategy that would capitalize on miners' fervent demand for GeForce GPUs, while falsely telling investors that the spike in GeForce sales came from gamers, not miners, and making it appear that Nvidia's core gaming business was immune from the volatility of the cryptocurrency markets. The amended filing follows California federal judge Haywood Gilliam's downsizing of the case in March. While Judge Gilliam found that the investors had failed to demonstrate that Nvidia knowingly issued false statements, he found that the plaintiff's assertions to properly link the 30% drop in share price to Nvidia's partial corrective disclosures. That's really easy to do. All they would have to do is go to Nvidia's vendors, anybody that they shipped a chipset to, and go to them and ask them what their volume for their demand was. How many chipsets were they selling? But yeah, Nvidia's been lying about their cryptocurrency sales or cryptocurrency related sales since, like I said, about 2014. You know, and it's really sad. You know, I mean, a lot of that was coming from Bitcoin miners. And if they were reporting how much of their sales was actually coming from Bitcoin miners, and it was significant, I believe that cryptocurrency mining would be even more popular than it is now, and they'd be selling even more fucking video cards than they are now. But no, we gotta stuff our head up our ass. We're a gaming company. We're a gaming company. Nobody uses our hardware to make money. No, that's not cryptocurrency miners. Perish the thought. Give me a fucking break. I mean, really, if you look at the hashing power on any cryptocurrency, you could probably find out which cryptocurrency people were mining with their devices, with Nvidia's fucking GPUs, just by comparing the volume of their sales and the hash rate on cryptocurrency networks. And you can go back and look at it over a historical period of time, like, you know, maybe Dogecoin. Look back to when their blockchain first started and the hashing power that's been dedicated to the network to date. And I can almost guarantee you, without even looking at any of the numbers right now, that you could track Nvidia's sales by the amount of hashing power that's been dedicated to Doge. Just to Doge. Or Bitcoin. If you wanted to track it all the way back to when it first started, start with Bitcoin's hash power chart. And again, you will be able to track Nvidia's sales by the amount of hashing power being dedicated to the network. And I want to say, like I said, around 2012, 2013 is when people started experimenting with GPU mining. And I think it hit full stride in like 2014, 2015, when people had racks of fucking GPUs dedicated to nothing but mining Bitcoin. And people still have that to this day. There are still people that are GPU mining Bitcoin. I mean, the number of them is much lower, and they're probably subsidizing their electricity from some source, whether it be legally or illegally. But the fact is that they're still able to profitably mine with GPUs. And so I believe that as long as Nvidia continues to stuff their head up their ass and miscommunicate how much of their sales is actually dependent upon cryptocurrency mining, they're going to continue to face these issues. Now, if they were really fucking smart, they would give up the pretense. They would say, we provide the hardware that's supplying about 30% of the hashing power dedicated to all of the cryptocurrency mining networks on this planet. Nvidia, if you were to say that would cause your sales to go up, because it would be people would be contrasting your unit sales to the likes of every one of the cryptocurrency miners out there. You know, whether we're talking about Bitfury or Antminer or any of them, BFL, any of them. If you were to demonstrate to people, say, hey, yo, we've got about 10 million fucking units out there right now, and when people were contrasting that versus all of the nodes that have been manufactured by other manufacturers that are out there right now, Nvidia, your sales would go up. Because you would be demonstrating to everybody, look, hey, yo, this is how much money people have been making using our devices. This is how much we're contributing to all of that. And so when me as a miner, when I'm deciding what I want to roll my hardware over to, do I want to go to ASIC mining? Do I want to stick with GPU mining? Do I want to go to CPU mining? What do I want to do? When I'm making that decision, if I can look at all the charts out there and I can say, oh shit, Nvidia represents about 40% of all the hashing power out there in the planet, you know, that's probably going to motivate me to want to buy an Nvidia card. Maybe 8, maybe 10. Maybe I'll fill a warehouse full of them. The people, you cannot continue to underestimate the amount of innovation and technology and power that all of this represents. And we're talking about like nuking and paving the entire global economy and replacing national fiat currencies with currencies that were independently mined on public ad hoc networks. And the people that are supplying the infrastructure for that are going to be the millionaires and billionaires of tomorrow. And the people that are supplying that hardware are going to become the trillionaires of tomorrow. But as long as entities like Nvidia want to keep living in this fantasy land where they're telling the rest of the world, oh no, that's a tiny percent of our sales, and it's actually representing so much of their sales that when mining becomes unpopular because people are losing their ass on it because the fucking price of their coin is tanking, and they stop buying Nvidia cards, they stop upgrading for a year or two, and it reflects on Nvidia's sale to the tune on their sales to the tune of 30% drops in their fucking quarterly sales. And come on, give me a break. We're here. Stop pretending that you're not facilitating this. Shit, you got JP Morgan. They're financing Gemini now. They're financing Coinbase now. So the pretense that you're participating in something so illegal and so shady that you need to lie to your investors about what people are doing with your hardware, yeah, just drop the pretense. You know, you can stop wearing that huge ass, traditional dress. You can put on the mini skirt, and you can show us that you're in the 21st century and that you're really hot and people really do want you. And get with it, man. Just fucking get with it. I've said this a number of times, and I'm going to say it again, that this current shutdown and all this shit, what it is demonstrating to the public at large is y'all got no plan. You got no real plan, because a shutdown is not a real plan. It's a reflection of an absence of a plan. And that's demonstrating to us gross incompetence. And the fact that your services, what your function is, can be replaced by a bunch of 14-year-olds with GPUs and public ad hoc networks is demonstrating to the rest of us that, you know, our trust is probably better held by them than you. That's not really an impression that you want to be giving. Anyway, let's go ahead and throw back down with some music before we get into that old lawsuit. And we are going to get into it tonight because I think it's important to enunciate those discrepancies between what people claim, what's really going on, and how that affects the global world of finance. Anyway, let's go ahead and throw down with some music, and here it is, Ministry. Let's go. Here on Coin Metal. And that was Prong with Controller. And so, as promised, we're going to get into this lawsuit. And so, did a little digging around and I found it. And so here it goes. And we've already prefaced it. You know, before the music break, I went through my own opinions as far as what the total impact of this has been so far. And honestly, I would say it's underestimation, even going by what they're asking or talking about here in the lawsuit of some one point something billion. We've probably lost far more than that due to the errant image that has been displayed to the rest of the world by entities such as Nvidia, or specifically Nvidia in this case, where they have distorted where their sales are actually coming from. If they were to be, as I was saying before the break, if they were to have been attributing them to cryptocurrency mining as they properly should have, we probably would be much farther ahead than we are right now. You know, as a matter of fact, if anything, I believe that Nvidia acted wrongly in a couple ways. That they really should have been upping their own production. You know, I mean, they would have gone down on profit margin per individual unit, but they would have sold a hell of a lot more units, and thus made more money. Anyway, this is on courtlistener.com. It's a PDF of the court case here. And this is the United States District Court, Northern District of California. Ironworkers Local 580 joint funds on behalf of itself and all others similarly situated. And the plaintiff, that was the plaintiff, and then the defendant is Nvidia Corporation, Jensen Huang, and Colette Kress. Plaintiff, Ironworkers Local 580 Joint Funds, plaintiff by and through its counsel, alleges the following upon information and belief, except as to those allegations concerning the plaintiff, which are alleged upon personal knowledge. Plaintiff's information and belief is based upon iter alia counsel's investigation, which included review and analysis of regulatory filings made by Nvidia Corporation, Nvidia, or the company with the United States Securities and Exchange Commission, SEC, B, press releases, presentations, and media reports issued by and disseminated by the company, C, analysts and media reports concerning Nvidia, and D, other public information regarding the company. Introduction. Number 1. The securities class action is being brought on behalf of purchasers of Nvidia stock between August 10th, 2017 and November 15th, 2018, inclusive the class period. The claims asserted herein are alleged against Nvidia and certain of the company's senior executives, collectively, quote, defendants, and arise under Sections 10b and 20a of the Securities and Exchange Act of 1934, the Exchange Act, and Rule 10b-5 promulgated thereunder. Number 2, Nvidia designs, develops, and markets graphics processing units, GPUs, and related software. Although traditionally used in connection with computer gaming, demand for the company's GPUs surged as Nvidia's GPUs became widely used in connection with cryptocurrency mining. Oh, it just says cryptocurrencies, I added mining. Given the volatility of the cryptocurrency market, the company's ability to adapt to the ever-changing cryptocurrency landscape was critical to investors. Number 3. Throughout the class period, defendants assured investors that the company followed the market closely and could adjust to rapid changes in the cryptocurrency markets. Even as analysts increasingly began to question the company's ability to manage inventory in the face of uncertain cryptocurrency market, defendants touted that Nvidia and its executives are, quote, masters at managing our channel, and we understand the channel very well. Nvidia also repeatedly assured investors that sales to cryptocurrency-related customers made up a small portion of the company's revenues, and that strong demand for GPUs by Nvidia's core customer base of computer gamers would compensate for any decline in demand from cryptocurrency users. These representations had their intended effect as analysts upgraded the company's stock and Nvidia shares traded at record highs. At the same time, Nvidia's senior executives began selling significant amounts of their personally held shares. For example, CEO Huang sold 110,000 of his personally held Nvidia shares during the class period, reaping over $18 million in proceeds. Notwithstanding the company's assurances, on November 15, 2018, Nvidia significantly cut its revenue guidance for the fiscal fourth quarter, revealing that revenue would decline by over 7% in the quarter. A significant departure from the 17% growth investors had been led to expect. Nvidia attributed its poor financial results to surging inventory of mid-range GPUs that built up in the channel before the rapid fade of cryptocurrency mining. These disclosures caused Nvidia's shares to decline by 29% over the ensuing 2 trading sessions. Number 2. Jurisdiction and venue. Number 6. The claims asserted herein under Sections 10b and 20a of the Exchange Act, USC 75J, subsection B, and 78T, subsection A, Rule 10b, subsection 5, promulgated thereunder by SEC 17 CFR 240.10b, subsection 5. The court has jurisdiction over the subject matter of this action pursuant to 28 U.S.C. 1331 and 1337 and Section 27 of the Exchange Act, 15 U.S.C. 78AA. Number 7. Venue is proper in this district pursuant to Section 27 of the Exchange Act and 28 U.S.C. 1391B. Nvidia maintains its corporate headquarters in Santa Clara, California, which is situated in this district, conducts substantial business in this district, and many of the acts and conduct that constitute the violations of law complained of herein, including the perpetuation and dissemination to the public of materially false and misleading information, occurred in this district. In connection with the acts alleged in this complaint, defendants directly or indirectly use the means and instrumentalities of interstate commerce, including but not limited to the mails, interstate telephone communications, and the facilities of the national securities markets. 3. Parties. Plaintiff from Workers' Local 580 Joint Funds provides, among other things, pension and health benefits to both active and retired participants in the ironworking industry, as well as their dependents and beneficiaries. Plaintiff purchased shares of Nvidia stock on the public market during the class period and suffered damages as a result of the violations of the federal securities laws alleged herein. Defendant Nvidia is a multinational technology company incorporated in Delaware. The company maintains its corporate headquarters at 2788 San Thomas Expressway, Santa Clara, California. Nvidia stock trades on the NASDAQ, which is an efficient market, under ticker symbol NVDA. As of November 9th, 2018, there were 610 million shares of Nvidia stock outstanding, owned by at least hundreds or thousands of investors. Number 10. Defendant Jensen Huang. Huang is and was at all relevant times President and Chief Executive Officer of Nvidia, as well as a member of the company's Board of Directors. Number 11. Defendant Colette Kress is and was at all relevant times Executive Vice President and Chief Financial Officer of Nvidia. Defendants Huang and Kress are collectively referred to hereinafter as individual defendants. The individual defendants, because of their positions at Nvidia, possess the power and authority to control the contents of Nvidia's reports to the SEC, press releases, and presentations to securities analysts, money and portfolio managers, and institutional investors. Each of the individual defendants was provided with copies of the company's reports and press releases alleged herein to be misleading prior to or shortly after their issuance, and had the ability and opportunity to prevent their issuance or cause them to be corrected. Because of their positions and access to material non-public information available to them, each of the individual defendants knew that the adverse facts specified herein had not been disclosed to and were being concealed from the public, and that the positive representations that were being made were then materially false and or misleading. Background. Number 13. Based in Santa Clara, California, Nvidia designs, develops, and markets GPUs and related software. A GPU is essentially a computer chip that performs rapid mathematical calculations, primarily for the purpose of rendering computer images. Although traditionally used in connection with computer gaming, demand for the company's GPUs has skyrocketed as Nvidia's GPUs became popular among cryptocurrency miners, i.e. people like you and me. Number 14. Cryptocurrency functions by enabling the public to generate additional cryptocurrency by working through complex calculations, a process referred to as mining cryptocurrency. In order to compete with other miners, a cryptocurrency miner needs a high-powered computer with specialized software. Although cryptocurrency mining was originally performed using traditional central processing units, or CPUs, their limited processing speeds and significant power consumption led to limited output, rendering CPU-based mining processes inefficient. As a result, miners began using GPUs, which offered faster processing speeds and significantly greater efficiency. Number 15. Recognizing the opportunity presented by this new customer base, Nvidia began manufacturing a GPU unit specifically designed and marketed for cryptocurrency mining. At the same time, the company repeatedly assured investors that sales of Nvidia's core gaming GPUs were driven almost entirely by demand for gaming customers and not from surging demand from cryptocurrency miners. The company also stated that cryptocurrency mining was only a small part of its GPU business, and that its focus remained on manufacturing GPUs for computer gamers. Number 5, Nvidia defrauds investors. Let me get a sip of water here before we travel too much deeper. Number 16. The class period begins on August 10th, 2017, the day Nvidia issued a press release announcing its financial results for the fiscal second quarter ending July 30th, 2017. In the press release, which was also filed with the SEC on Form 8K, the company reported, quote, record revenue of $2.23 billion, up 56% from $1.43 billion a year earlier, and up 15% from $1.94 billion in the previous quarter. The press release also quoted CEO Huang attributing the revenue growth to a variety of factors, including data center revenue increased more than 2.5 times. A growing number of car and robot taxi companies are choosing our Drive PX self-driving computing platform and, quote, in gaming, increasingly the world's most popular form of entertainment, we power the fastest growing platforms, GeForce and Nvidia, or Nintendo Switch rather. Nintendo Switch. Number 17, the same day, Nvidia held a conference call with analysts and investors to discuss the company's earnings and operations. During the conference call, analysts questioned how the company was managing the volatility in cryptocurrency markets. In response, Defendant Huang stated, quote, our strategy is to stay very, very close to the market. We understand its dynamics really well. Defendant Huang also credited the scale of Nvidia's business as a reason why the company would not be impacted by the ebb and flow of the cryptocurrency markets, stating that, quote, the larger of a GPU company you are, the greater ability you can absorb the volatility, and touting the company's, quote, ability to rock and roll with this market as it goes. 18. On September 6, 2017, Nvidia presented at the Citi Global Technology Conference. During the conference, Defendant Kress was asked about the steps Nvidia has taken, quote, to avoid cannibalization of core gaming market as a result of increased demand from cryptocurrency miners. In response, Defendant Kress stated, quote, we covered most of cryptocurrency with our crypto cards that we had developed. Kress also stated that Nvidia has, quote, the ability, given the breadth of GPUs that we already build, to develop GPUs exclusively for cryptocurrency, and that the company, quote, is able to serve that market quite efficiently or effectively, and we will serve that market effectively. 19. On November 9th, 2017, Nvidia issued a press release announcing its financial results for the third quarter ended October 29th, 2017. In the press release, which was also filed with the SEC on Form 8K, the company reported, quote, record revenue of $2.64 billion, up 32% from $2 billion a year earlier, and up 18% from $2.23 billion in the previous quarter. The press release also quoted Defendant Huang attributing the company's revenue growth to a variety of factors, including Nvidia's Volta GPU has been embraced by every major internet and cloud service provider and computer maker. The company's Tensor RT inference acceleration platform opens us to growth in hyperscale data centers. GeForce and Nintendo Switch are tapped into the strongest growth dynamics of gaming, and Nvidia's, quote, new Drive PX Pegasus for robotaxis has been adopted by companies around the world. Number 20. That same day, Nvidia held a conference call with analysts and investors to discuss the company's earnings and operations. During the conference call, Defendant Kress stated that although, quote, GPU sales benefited from continued cryptocurrency mining, the company remained nimble in our approach to the cryptocurrency market and assured investors that its cryptocurrency-related business, quote, will not distract us from focusing on our core gaming market. During the call, analysts questioned, quote, why should we think that crypto won't impact the gaming demand in the future? In response, Defendant Huang assured investors that, quote, long term, the way to think about it is, quote, crypto is small for us, but not zero. Defendant Huang further downplayed the importance of cryptocurrency mining on Nvidia's growth, touting that, quote, when you think about crypto in the context of our company overall, the thing to remember is that we're the largest GPU computing company in the world, and our overall GPU business is really sizable, and we have multiple segments. In addition, Huang also stated that, quote, crypto usage of GPUs will be small, but not zero for some time. 21. On November 29, 2017, Nvidia presented at the Credit Suisse Technology, Media and Telecom Conference. During the conference, an analyst noted that, quote, it was the first time that Nvidia had mentioned cryptocurrency as being partly driving the gaming side of business, meaning that the company acknowledged that at least some portion of the sales of gaming GPUs were being purchased for cryptocurrency mining. In response, Defendant Kress continued to downplay the impact of cryptocurrency demand on Nvidia's gaming business, stating that, quote, although there probably is some residual amount or some small amount in terms of that, we do believe the majority does reside in terms of our overall crypto card. 22. Although cryptocurrency prices began to decline in early 2018, sales of Nvidia GPUs continued to increase, which the company attributed to, quote, pent-up demand among gamers who had been priced out after demand from cryptocurrency miners drove up GPU prices and caused inventory constraints. The company also continued to assure investors that cryptocurrency mining was only a small part of its business and that Nvidia would not be negatively affected by the cryptocurrency market decline. Number 23. For example, on February 8, 2018, Nvidia issued a press release announcing its financial results for the fourth quarter ending January 28, 2018. In the press release, which was also filed with the SEC on Form 8K, the company reported, quote, record revenue of $2.91 billion, up 34% from $2.17 billion a year earlier, and up 10% from $2.64 billion in the previous quarter. The press release also quoted Defendant Huang, attributing the company's revenue growth to a variety of factors, including adoption of Nvidia's GPUs as, quote, software developers working in AI, self-driving cars, and a broad range of other fields continued to discover the acceleration and money-saving benefits of our GPU computing platform. Number 24. The same day, Nvidia held a conference call with analysts and investors to discuss the company's earnings and operations. During the conference call, Defendant Kress stated that Nvidia, quote, met some of this cryptocurrency demand with a dedicated board in our OEM business and was met with our gaming GPUs, or some was met with our gaming GPUs. As a result, Kress stated, quote, this contributed to lower than historical channel inventory levels of our gaming GPUs throughout the quarter. Although Kress acknowledged that the overall contribution of cryptocurrency to our business was a higher percentage of revenue than the prior quarter, she assured investors that, quote, our main focus remains on our core gaming market. Also during the conference call, Defendant Huang assured investors that there's a fairly sizable pent-up demand growing into this quarter among gamers looking to purchase Nvidia GPUs. Defendant Huang also stated that although the GPU supply channel is relatively lean, Nvidia was, quote, working really hard to get GPUs down to the marketplace for gamers. 25. On February 26, 2018, Nvidia presented at the Morgan Stanley Technology, Media, and Telecom Conference. During the conference, an analyst asked about the cause of Nvidia's GPU supply constraints and how Nvidia was prioritizing its sales in a supply-constrained environment. In response, Defendant Kress stated that, quote, channels had been influenced not only by the strength of the overall gaming that we had seen for the overall holiday season, but also the large uptick that we've seen in overall valuation of cryptocurrency. Kress also stated that the company was focused on, quote, making sure gamers worldwide receive the cards that we want to do. Kress also continued to assure investors that cryptocurrency miners would not impact sales of GPUs to gaming customers, stating that, quote, we do believe we can serve cryptocurrency miners primarily with those specialized cards, and that's going to be our goal going forward, and that, quote, we're going to really try our hardest to really focus our overall GPUs for gaming, for overall gamers going forward. 26. On May 10th, 2018, Nvidia issued a press release announcing its financial results for the first quarter ended April 29th, 2018. In the press release, which was also filed with the SEC on Form 8K, the company reported, quote, record revenue of $3.21 billion, up 66% from $1.9 billion a year earlier, and up 10% from $2.91 billion in the previous quarter. The press release also quoted Defendant Huang attributing the company's revenue growth to a variety of factors, including Nvidia's data center business achieved another record and gaming remained strong. 27. That same day, Nvidia held a conference call with analysts and investors to discuss the company's earnings and operations. During the call, Defendant Huang continued to reassure investors that Nvidia was not driving sales of gaming GPUs by selling them to cryptocurrency miners, stating that, quote, we try to as We try to as transparently reveal our numbers as we can, and our strategy is to create an SKU that allows crypto miners to fulfill their needs as much as possible, fulfill their demand that way. Number 28. May 16th, 2018. Nvidia held its annual shareholder meeting, during which Defendant Huang responded to questions submitted by shareholders before the meeting. During the meeting, Defendant Huang continued to downplay the importance of cryptocurrency mining on the company's growth, stating that, quote, Ethereum and crypto mining is a recent GPU application. It is a bonus in our business, but volatile. It's not really a factor in our core business. We have great growth drivers without crypto. Defendant Huang also stated that, quote, our core businesses in gaming and high-performance computing and artificial intelligence and self-driving cars are doing so well that with or without crypto mining, we have a growth. We have a wonderful growth business behind us. 29. The statements and omissions set forth in 16-21, 23-28 were materially false and misleading. In truth, revenue growth attributed to Nvidia's gaming GPUs was driven, in significant part, by surging demand among cryptocurrency miners. In addition, contrary to its assertions, Nvidia did not have visibility into its inventory channel and was unable to adapt to changes in the cryptocurrency markets. Moreover, as cryptocurrency prices began to plummet, Nvidia masked slowing growth by continuing to push mid-range GPUs into the channel, which caused inventory levels to skyrocket and ultimately left Nvidia with over 3 months of excess inventory in its channel. 30. On August 16, 2018, Nvidia lowered its revenue guidance by about 2.2% for the third quarter of 2018 and reported that it no longer expects a meaningful contribution from cryptocurrency miners for the remainder of the year. Nvidia also reported that its GPU inventory had ballooned over 30% from the prior quarter, which investors feared could be a sign of slowing demand for Nvidia GPUs. As a result of these disclosures, Nvidia shares declined $12.62 per share, or 4.9%. Number 31. Despite these disclosures, Nvidia continued to assuage investor concerns about slowing demand for its GPUs. For example, on August 2016 during an August 16, 2018 conference call with analysts and investors, Defendant Huang attributed rising inventories to ramping up the launch of a new GPU product featuring the company's, quote, Turing architecture, and assured investors that the inventory would, quote, work itself out, and that the company was, quote, not concerned about the channel inventory. Defendant Huang further touted that we are masters at managing our channel, and we understand the channel very well. 32. The statements and omissions set forth in 31 were materially false and misleading. In truth, the demand for Nvidia gaming GPUs among cryptocurrency miners was a much more significant driver of Nvidia's growth than the company had disclosed. In addition, contrary to its assertions, Nvidia did not have visibility into its inventory channel and was unable to adapt to changes in the cryptocurrency markets. Moreover, As cryptocurrency prices began to plummet, Nvidia masked slowing growth by continuing to push mid-range GPUs into the channel, which caused inventory levels to skyrocket and ultimately left Nvidia with over 3 months of excess inventory in its channel. Number 33. On November 15, 2018, however, Nvidia significantly cut its revenue guidance for the fiscal fourth quarter, revealing that revenues would actually decline by over 7% in the quarter, a significant departure from the 17% growth investors had been led to expect. Nvidia attributed its poor financial results to surging inventory of mid-range GPUs that built up before the rapid fade of cryptocurrency mining. As a result, the company said it would not ship any of its mid-range GPUs into the channel for at least an entire quarter. Number 34. Following these disclosures, analysts immediately questioned management's credibility and were quick to note that these disclosures stood in stark contrast to the company's prior assurances regarding the impact of cryptocurrency on its business and Nvidia's ability to react to rapid changes in the cryptocurrency market. For example, analysts with BMO Capital Markets stated that, quote, the large shortfall in guidance due to a bloated channel due to cryptocurrency is in sharp contrast to the comments around channel inventory from the company. Several other analysts questioned whether the company could work through its bloated inventory in just one quarter, indicating that the inventory issue was so large that it could take up to 3 quarters to resolve. Number 35. These disclosures caused Nvidia shares to decline by $57.69 or 28.5% over the next 2 trading sessions, wiping out over $35 billion in shareholder value. Oh, Jesus Christ. Number 7. Loss causation. 36. During the class period as detailed herein, defendants made materially false and misleading statements and omissions and engaged in a scheme to deceive the market. This artificially inflated the price of Nvidia's stock and operated as a fraud or deceit on the class as defined below. Later, when defendants' prior misrepresentations and fraudulent conduct were disclosed to the market on August 16, 2018 and November 15, 2018, the price of Nvidia's stock fell. As a result of their purchases of Nvidia's stock during the class period, plaintiff and other members of the class suffered harm. Number 8. Class action allegations. 37. Plaintiff brings this action as a class action pursuant to Rule 23 of the Federal Rules of Civil Procedure on behalf of all persons who purchased Nvidia's stock during the class period. The class. Excluded from the class are defendants and their families, directors, and officers of Nvidia and their families and affiliates. Shit, I wouldn't exclude any of those motherfuckers. They were all probably drafters of this fucking scheme. 38. The members of the class are so numerous that the joinder of all members is impracticable. The disposition of their claims in a class action will provide substantial benefits to the parties and the court. Nvidia has approximately 610 million shares of stock outstanding, owned by at least hundreds or thousands of investors. Number 39. Questions of law and fact common to the members of the class, which predominate over questions which may affect individual class members, include A. Whether defendants violated the Exchange Act. B. Whether defendants omitted and or misrepresented material facts. And C. Whether defendants' statements omitted material facts necessary in order to make statements made in light of the circumstances under which they were made, not misleading. D. whether defendants knew or recklessly disregarded that their statements and or omissions were false and misleading. E. Whether defendants' misconduct impacted the price of Nvidia's stock. Oh, goddamn, yes it did. F. Whether defendants' conduct caused the members of the class to sustain harm. And G. The extent of the harm sustained by the class members and the appropriate measure of harm. 40. Plaintiff's claims are typical of those of the class because plaintiff and the class sustained harm from the defendant's wrongful conduct. 41. Plaintiff will adequately protect the interests of the class and has retained counsel experienced in class action securities litigation. Plaintiff has no interest which conflict with those of the class. 42. A class action is superior to other available methods for the fair and efficient adjudication of this controversy. Number 9. Inapplicability of statutory safe harbor. 43. Nvidia's safe harbor warnings accompanying its forward-looking statements issued during the class period were ineffective to shield those statements from liability. Number 44. Defendants are also liable for any false or misleading forward-looking statements pleaded herein because, at the time of each statement was made, the speaker knew the statement was false or misleading, and the statement was authorized and or approved by an executive officer of Nvidia who knew that the statement was false. None of the historic or present tense statements made by the defendants were assumptions underlying or relating to any plan, projection, or statement of future economic performance, as they were not stated to be such assumptions underlying or relating to any projection or statement of future economic performance when made, nor were any of the projections or forecasts made by defendants expressly related to or stated to be dependent on those historic or presented tense statements when made. Presumption of reliance. Number 45. At all relevant times, the market for Nvidia's stock was an efficient market for the following reasons, among others. A. Nvidia's stock met the requirements for listing and was listed and actively traded on the Nasdaq, a highly efficient and automated market. B. As a regulated issuer, Nvidia filed periodic public reports with the SEC and Nasdaq. C. Nvidia regularly and publicly communicated with investors via established market communication mechanisms, including through regular disseminations of press releases on the national circuits of major newswire services and through other wide-ranging public disclosures, such as communications with the financial press and other similar reporting services. And D. Nvidia was followed by several securities analysts employed by major brokerage firms who wrote reports which were distributed to the sales force and certain customers of their respective brokerage firms. Each of these reports was publicly available and entered the public marketplace. 46. As a result of the foregoing, the market for Nvidia's stock promptly digested current information regarding Nvidia from all publicly available sources and reflected such information in the price of Nvidia's stock. Under these circumstances, all purchasers of Nvidia's stock during the class period suffered similar injury through their purchase of Nvidia's stock at artificially inflated prices, and the presumption of reliance applies. 47. A class-wide presumption of reliance is also appropriate in this action under the Supreme Court's holding in Affiliated Utah Citizens of Utah vs. United States, 406 U.S. 128, 1972, because The class claims are grounded on defendants' material omissions. Because this action involves defendants' failure to disclose material adverse information regarding the impact that demand from cryptocurrency miners had on Nvidia's GPU business, information that defendants were obligated to disclose, positive proof of reliance is not a prerequisite to recovery. All that is necessary is that the facts withheld be material in the sense that a reasonable investor might have considered them important in making investment decisions. Given the importance of the Nvidia's GPU business as set forth above, that requirement is satisfied here. Count 1. For violation of Section 10b of the Exchange Act and Rule 10b-5 against all defendants. Number 48. Plaintiff repeats, incorporates, and realleges each and every allegation set forth above as if fully set forth herein. Number 49. During the class period, defendants carried out a plan, scheme, and course of conduct which was intended to, and throughout the class period did, deceive the investing public, including plaintiff and other class members as alleged herein, and caused economic harm to plaintiff and other members of the class. Number 50. Defendants employed devices, schemes, and artifices to defraud, made untrue statements of material fact, and or omitted to state material facts necessary to make the statements not misleading, and engaged in acts, practices, and a course of business which operated as a fraud and deceit upon the purchasers of the company's stock in violation of Section 10b of the Exchange Act and Rule 10b-5 promulgated thereunder. 51. Defendants individually and in concert, directly and indirectly, by the use, means, or instrumentalities of interstate commerce and or of the mails, engaged and participated in a continuous course of conduct to conceal adverse material information about the company's financial well-being, operations, and prospects. Let's see how much further we want to go with this. Oh, we're getting to the end. Let's see here. 51. Defendants individually... Let's see if... No, we already covered that one. 52. During the class period, defendants made the false statements specified above, which they knew or recklessly disregarded to be false or misleading, in that they contained misrepresentations and failed to disclose material facts necessary in order to make the statements made, in light of the circumstances under which they were made, not misleading. 53. Defendants had actual knowledge of the misrepresentations and omissions of material facts set forth herein, or recklessly disregarded the true facts that were available to them. Defendants engaged in this misconduct to conceal Nvidia's true condition from the investing public and to support the artificially inflated prices of the company's stock. 54. Plaintiff and the class have suffered damages that in reliance on the integrity of the market, they purchased Nvidia's stock and were harmed when the truth about Nvidia negatively impacted the price of those securities. Plaintiff and the class would not have purchased Nvidia's stock at the prices they paid, or at all, had they been aware of the truth about Nvidia. 55. As a direct and proximate result of defendants' wrongful conduct, plaintiff and the other members of the class suffered harm in connection with their respective purchases of the company's stock during the class period. 56. By virtue of the foregoing, defendants violated Section 10b of the Exchange Act and Rule 10b-5 promulgated thereunder. Count 2. For violation of Section 20A of the Exchange Act against individual defendants. 57. Plaintiff repeats, incorporates, and realleges each and every allegation set forth above as if fully set forth herein. 58. The individual defendants acted as controlling persons of Nvidia within the meaning of Section 20A of the Exchange Act. By virtue of their high-level positions, participation in and or awareness of company's operations, direct involvement in the day-to-day operations of the company, and or intimate knowledge of the company's actual performance, and their power to control public statements about Nvidia, the individual defendants had the power and ability to control the actions of Nvidia and its employees. By reason of such conduct, the individual defendants are liable, pursuant to Section 20A of the Exchange Act. Prayer for relief. Wherefore, plaintiff prays for judgment as follows. A. Determining that this action is a proper class action under Rule 23 of the Federal Rules of Civil Procedure. B. Awarding compensation to plaintiff and other class members against all defendants, jointly and severally, for all harm sustained as a result of defendants' wrongdoing in an amount to be proven at trial, including interest thereon. C. Awarding plaintiff and the class their reasonable costs and expenses incurred in this action, including attorney's fees and expert fees, and D. Awarding such equitable/injunctive or other further relief as the court may deem just and proper. 12. Jury demand. Plaintiff demands a trial by jury. This is dated December 21st, 2018, respectfully submitted. Interesting. So this was for 12/21/2018. Yeah, it's really interesting. I guess there was an amendment to this recently that I guess that's why it was brought up again. Really weird. But yeah, I don't know what to say. I think that Nvidia would be deemed guilty in this thing. Let me check something else really quick though, because I could swear that this was something recent that. Here we go. And this was authored. Yeah, this is authored 7 hours ago, and so I don't know why this guy would have reported on this thing. I mean, unless it was something recent where, yeah, okay, it's an amended class action complaint. And I guess that they filed a new complaint on May 14th. Okay, and so originally it was submitted in 2018, and given market performance since then, I think this case would be a slam dunk. I mean, completely. I noted before we even got into the lawsuit itself, all you had to do was go back, evaluate Nvidia's sale volume, and you don't even have to know where the fucking cards went. You could actually look at all the hashing power that was dedicated to cryptocurrency mining networks out there, and you could have found Nvidia's fucking cards. So this whole thing, I think it's going to blow up in Nvidia's face. And I'm not sure, but I think we've reported on this that multiple times, where Nvidia and other GPU manufacturers were downplaying the volume of their sales that was represented by cryptocurrency miners. And they have been since about, I want to say 2013, 2014. That's when there started to be drought of GPUs in the supply chain. And I remember it distinctly because, I was involved in this space back then, I was doing GPU mining back in 2013. But anyway, that's how I know what I know about Nvidia cards and their use in cryptocurrency mining. And really, GPUs, cheap GPUs out there on the market is one of the things that drove the first alt bloom. And I really wish that Nvidia did report everything like completely legit. Like if they were reporting things objectively, just saying, hey, look, we don't really have any control over who buys our cards. We don't have any control over what they actually use them for. But we have noticed that there's been this huge uptick in people buying our cards and mining cryptocurrency with them. And so in response to that, we're going to expand our manufacturing so that we can accommodate the mining demand and keep our units cheap enough for people to be able to afford to put them in gaming boxes. But they didn't do that. They were looking at their profit margins on $500 cards on their direct retail outlets and saying, fuck these people. We're not having to work all that hard and we're making a shit ton of money. Let's just misreport everything. Say it's all fucking gamers and AI and fucking robo-taxis. And give me a fucking break, man. Everybody that was mining or gaming, from everybody that has been mining and or gaming since 2012, 2013. I was actually kind of late coming to GPU mining. Okay? And so, like I said, if you were to go back to Nvidia's sales volumes, if you want a real read to determine how much of their sales has been represented by mining, you have to go back to 2012 because that's when GPU mining really started. And like I said, you can find articles to verify that. That at first the droughts in GPUs in the supply chain were completely misreported. They were just like, oh, we don't understand it. It's got to be Titanfall or something else. They completely misreported it. And I don't know if it was because they knew it was going to mining and just didn't want to say that because of the questionable legal status of mining at the time. Or, I don't know. I don't know what their fucking excuse is. But the fact of the matter is that if you want to know how much of their money is coming from mining, you have to go back to, like I said, 2011, and you have to project from there and if you did, you'd probably see the massive spike in the amount of units they were selling from one quarter to the next when GPU mining picked up. But then you have to carry that forward. See that they're still, just going by the terms of this class action suit, I can tell you right now, their estimates are all very, very conservative because of the limited range of the class action suit. And I mean that's cool because it's the only thing that really concerns them is this period between 2017 and 2018 when their particular groups were invested in Nvidia. All right, but again, in order to understand how deep the scheme really goes, you have to understand that at least 15 to 20% of Nvidia's persistent demand since 2012 has been miners. If you don't take that into account, then all of this doesn't make any sense. Drops in demand and stuff, none of it makes any sense. And they can make these obfuscations in their claims just because the market is completely distorted and nobody knows how many fucking GPUs are actually going to mining. And like I said, I would suggest that the vast majority of their sales of $500 plus video cards has been going to miners. And I mean, if you really want to get down to it, you'd have to come down to like $200 and $300 cards, because when I'm in mining groups and I'm watching the scuttlebutt, they're talking about mining with $200 and $300 cards. So again, if you want to know how deep the scam goes, you have to go all the way back to 2012 with regard to Nvidia and how many cards they were shipping at the time. And I don't even think they were called Nvidia at the time. I'm not sure on that. You'd have to go back and look. But anyway, like I was saying, if you look at the supply volume that they were providing of chipsets that they were putting out to the market, and you want a realistic figure of how much mining means to them in terms of their quarterly profit, you have to go back to 2012. You have to expand it past beyond the range of the complaint here. Because if you do that, you're going to find out that they've got a significant amount of the market to continue to lose. And I believe that if they continue to underreport the significance of cryptocurrency mining in their quarterly and annual reports, they will get hit with it. TSMC will find some other distributor that's willing to admit how much of their chipsets are actually going to mining. But I don't know. I've reported multiple times on this show that I do believe that a greater number of you are going to be getting into mining. And I believe that the shutdown and the reciprocal effects on the market as a whole is going to be what's driving it. So I can see ahead where if it does go that way, if things are actually coming out that way, where people are spending their stimulus checks on fucking GPUs and getting into mining, which I expect them to do to some extent, that we're going to see another alt bloom. That, people are going to be looking at the available projects out there, and they're going to be evaluating them in terms of what we've observed over the market or what's been observed in the market concerning those coins, and they're going to make decisions about how they want to develop their own coin and distribute it out there. And that'll be really good for Nvidia and other video card makers, but I don't believe that Nvidia is going to continue to persist as a legal or corporate entity if they continue to operate the way that they are. Because I think this is going to bring them into a significant amount of liability, and it's because they're just silly in their reporting, and I think they continue to be silly in their reporting. They're drastically undervaluing themselves in terms of what they actually provide to the market, and the reciprocal of that is that we're having lower than should be participation levels in the public. They're receiving lower demand, and their investors are receiving lower return on investment. It's not good for anybody. And the quicker they change this course of action, I believe the better it will be for them and everybody else. Anyway, let's go ahead and throw back down with some music. And as far as where to go, seeing some Slayer in front of me here, and I really like South of Heaven. It's one of those albums that it's like They were like the apex of their innovation and their style and their ability. And so let's go ahead and throw it down. Live Undead by Slayer here on Coin Metal. And that was Wayne Static with Around the Turn. And it is with that I'd like to close out this episode. Thank you very much for listening. I certainly do appreciate the support. We will be back again on Monday at 8 p.m. Pacific Standard Time. And so until then, I want y'all to trade safe. Do your homework. And watch out for your own bunghole, because nobody else is going to do it for you. And so as far as our last dance is concerned, I have not picked one out. You know how that rolls. But I think I can manage something here. Let's see, we've got about 4 or 5 minutes. I got some 12-foot ninja rolling in the background here. Let me see if we got something good there. That one's a little bit short. That one's a little bit long. Let's go with this one. Coming for You, Last Dance, here on Coin Metal. Thank you again for listening, and y'all have an excellent weekend. Good night.